Welcome to today's Stock Market Explainer by WEGRO, your real-time stock market dosed on WhatsApp. Today, we are digging into a pretty dramatic day on the markets, what we're calling the tariff takedown.
Okay, so the market took a serious hit today. I mean, both the Sensex and the Nifty just plunged, wiping out a lot of recent gains and leaving investors asking, whoa, what just happened?
Let's just look at the numbers here. The BSE Sensex closed down a massive 849 points. That's some heavy selling pressure, right from the get-go.
And of course, the NSE Nifty 50 wasn't spared. It dropped 256 points. You know, it even fell below a key trend line that a lot of traders keep a close eye on. That's a pretty clear signal that the positive momentum has, well, shifted downwards for now.
So what does that mean in real money? Well, that plunge in the indices translated into a huge loss. We're talking 6 lakh crore rupees in investor wealth just gone, vanished. That's an incredible amount of value wiped out in just a few hours of trading. Just let that sink in.
All right, so the big question is, what was the trigger for this dramatic tumble? Turns out it wasn't just one thing. It was more like a perfect storm of pressures, coming from both overseas and right here at home.
The main culprit, the big headline grabber, was the threat of new U.S. tariffs. Now, for anyone who needs a quick refresher, a tariff is basically just a tax that one country slaps on goods coming in from another. It makes those imported products more expensive.
So there were really 3 big reasons behind today's sell-off. First and foremost, that U.S. tariff threat. That sparked fears of a potential trade war. Then you add on top of that weakness in other global markets, like in Asia and Europe. And finally, the big one, continued selling from foreign institutional investors, or FIIs. When these big overseas funds start selling, believe me, the market feels it.
And just to add a little more fuel to that fire, the Indian rupee weakened again. You see, a weaker rupee makes imports more expensive for our companies, and it can really spook those foreign investors we just talked about. It kind of creates this vicious cycle of negative feeling in the market.
Okay, so let's zoom in a bit and see how this played out across different sectors. I mean, when the main indices fall this hard, you just know the pain is going to be widespread.
And yup, the damage was felt pretty much everywhere. I mean, just look at these numbers. Almost every single sector ended deep in the red. Realty got hit the hardest, but PSU banks, pharma, and metal stocks were right there with them, taking the brunt of all that selling.
And we're not just talking about broad selling across the board. The market's biggest players, the heavyweights, were hit hard. When giants like Reliance, ICICI Bank, and Tata Steel are all falling on the same day, their sheer size pulls the whole Sensex and Nifty down with them. It's like an anchor.
But you know what's interesting? Amidst this whole sea of red, there was one surprising survivor that actually bucked the trend. It was a classic flight to safety move, where investors basically ran for cover in one specific part of the market.
Yeah, this really shows a tale of two markets, doesn't it? While all those sectors tied to the global economy were crumbling, FMCG stocks, the companies that sell everyday stuff, they actually ended the day with gains. That's a huge signal that investors were shifting their focus to the safety of domestic demand.
So, why FMCG? What was the hope there? Well, it was all fueled by these strong rumors and hopes of a potential GST rate cut on consumer goods. See, with the festive season right around the corner, a tax cut could give a serious boost to sales and, of course, company profits.
And experts were picking up on this too. Vinod Nair from Geojit Investments pointed out that, yeah, there was broad-based selling, but investors were clearly moving towards these defensive stocks with stable, predictable domestic demand. It was their way of shielding themselves from all that global tariff chaos.
All right, so after a crazy day like today, what's next? What are the key levels that traders are now watching? After a big fall, figuring out these levels is absolutely crucial for guessing the market's next move.
For the Nifty, the immediate support, think of it as a floor, is now seen around that 24,600 to 24,650 zone. If the market keeps falling, that's where buyers might decide to step in. And on the flip side, any bounce back is going to face a ceiling or resistance right around that 24,850 mark. And it's a similar story for the Sensex. The key floor to keep an eye on is around 80,500. If it breaks below that, we could see more weakness. And any recovery rally will likely hit a wall around that 81,300 level.
Okay, let's wrap this up. What's the big picture here? What does all of this really mean? Days like today can be pretty nerve-wracking, but it's all about putting them in the right perspective.
And here's the most important thing to remember.
Market shocks like these, as unsettling as they feel, are a normal part of trading and investing. They happen. They're not some kind of weird anomaly. They're an expected part of the journey.
So that leaves us with one final and really important thought. Does all this short-term volatility just spell risk? Or could it also signal opportunity? I mean, if you look back at market history, it's often in these moments of chaos that the smartest investors find their best entry points.
And staying prepared means staying informed. If you want real-time stock market news and alerts without any delay, right on your WhatsApp, WEGRO makes trading and investing easy.
And just a quick reminder, please remember, this explainer is for educational and informational purposes only. It is not investment advice. You should always consult with your financial advisor before making any investment decisions.